We have thousands of indicators to watch out for, but there are two that stand out in front of the rest. 2018 will be filled with excitement, that's for sure. Keep your focus. You came here for the truth, so let me unveil that for you. Today we're going to look at the two most important signals for 2018. Let's begin. The G3 central bank balance sheet. This is incredibly important, and of course I've been covering this over the years. After QE3 ended, we clearly witnessed that it wasn't just the Federal Reserve's balance sheet that was important. It was the G3 central bank balance sheet. And so you should be keeping a very close eye on this as the days, the weeks, the months go on throughout 2018. You see, as the Federal Reserve stopped printing, QE3 was done, you'll see their balance sheet essentially just stagnant, right across at approximately 4.5 trillion. And how was the market able to continue? How was it able to go up? Well, as you can see here, in complete correlation, the G3 central bank balance sheet matches up perfectly with global stocks. And that's what you have to understand. It's the same for US stocks, even global stocks on the whole when you include US stocks. That's what we need to look at. As long as they print money, as long as somebody's printing money, it will finally make its way around and push the prices up. That's what's going on here. There are no natural market forces anymore. That simply doesn't exist. There are only central banks. And so many people who invest in stocks, they believe that they somehow are manipulating the prices, that they're able to have their investment make a difference. But that's not the way it works. There are only central banks. You can ride the wave, but ultimately, real investors don't make a difference in the prices that we see. That goes for stocks, that goes for bonds, or anything else. So understand what's happening with the central banks, that they've decided to print approximately $15 trillion in recent years. They suggest that they're going to pull back in approximately $1 trillion of liquidity within 2018. And so, if they decide to do so, that could start a cascading or snowball effect. If they don't do that and they continue to print, then stocks can go higher and higher and higher. Remember I said this, because a lot of people would suggest that there's all this negativity coming my way. But I'll tell you right now, as long as they're willing to print, as long as they're keeping interest rates low, stocks will rise. Look at this, the 12-month change in central bank assets. You're witnessing that here, where you can see their supposed claim of reducing their balance sheets. And if they were to do so, to bring their balance sheet, the Federal Reserve, to bring their balance sheet down to zero at the pace that they've suggested they're going to do so is 2030. That's when it becomes zero. And that suggests that there will be no crash in between now and then. And we know that's a joke. So looking at this, all the central banks are engaging in the same policies. They all claim to want to have the same goals in mind. And not a single one of them can ever accomplish what they set out to do. Fed raises interest rates, keeps policy outlook unchanged for 2018. The interest rates are still at rock bottom. It's taken them 2 whole years to get to the level that they are at now, which is considered historically near record lows. And that, everybody, is an embarrassment. It is a true embarrassment. Because on one hand, we're being told that the economy is doing very, very well, it's booming, yet interest rates are at historic lows. Something smells fishy. That's all for this video. Just remember, interest rates, quantitative easing, keep an eye on the central bank balance sheets, and you will know which direction the market is heading. Please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can take a look at these books. Links are in the description below. Take care.